The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials down 32, Nasdaq's up 45, S&P's up 2.5. Gold contract up $10, trading 2009. You got silver up 34 cents, $28.02 an ounce. Light sweet crude down 38 cents, $42.52 a barrel. Notes and bonds. We have the 10-year flat, 139.09. The 30-year is up 2 at 178.13, and King Dollar is down at 609 points. Ticks rather at 92.244. The euro is at 119. The yen is at 105.42, and the British pound is at 132 to 1 US dollar. Our phone number is 877-927-6648. We get over and we take a look at this market, folks. Bottom line is that you're going to look at the S&Ps. The S&Ps can't hold price. I don't expect anything to hold price out here today, too. You can kind of see this in the gold market, folks. Gold was up really well. Let's go through the S&P first. So the S&P, we get up to 33.90 this morning. Right now, you're at 33.78. Bottom line, that can't hold price. We get over to the gold market. The gold market's probably going to, we get a nice acceleration up to 24. Now, here's where this is what's really cool about the gold market, folks, okay, is that we got up to a price point of 2024. They slam gold right now at the open. That's a normal situation in a market that the bottom line is that as gold goes higher, folks, okay, fundamentally, if you're a fundamentalist, that is saying that flat out we're either coming into inflation, we're coming into harder times, whatever that is, okay? When that happens, the bottom line, the banks like to slam gold. That being said, here's the divergence in it, which is just so cool, that the dollar today busted out its lows. I mean, and we're talking about conviction. Conviction is wide price spread as you're breaking lows, as you're breaking highs, with volume. Now, what happens inside of the currency market, bottom line, we don't have volume. So what do you have here? We were building cause to break down at the 92.546. We blew it apart. You take a look at this. The next stop down here is 88. And it's a big number, folks. It's particularly a big number because what you have out here is that you have the aspect of the gold already over 2,000. So you can see this is glaring, meaning at the 88. Now, my take actually is that it's going to blow away the 88. Now, if that's what we get, this is what you're going to have shaken out here, which is really cool. Well, it's cool if you're a metals bull. 88 is your bottom. Your top of the, the top of the consolidation that we've been in, going all the way over to March of 2015, I'm not going to use the top spike, okay? The top spike is 103. I'm going to just use the 100. So you take the 88, you take the 100, which is 12, you take 12 away from the 88, which is 76. And your next leg down there is 79. Your lowest leg thus far is 72. Now, the high of the low of 2011 is 76. So we'll take it step by step. My take right now, we're going to 88. You'll probably blow away that baby. You'll build some more cars down there. And, you know, bottom line, you can be down to 76. So it's a big number. We go take a look at the euro. You can see the other currencies, bottom line. Of course, they're breaking topside, which would make sense, by the way, too. But, you know, this is not like an anomaly like that's actually far out. Because we've talked about this before. When we take a look at the euro, bottom line is that the euro has been down since 2008. Well, it's 2020. It's 12 years. Bottom line, it makes sense that it's going to change trend. Why? Because when we take a look at the overall longer-term deal, what you're going to see, and I'm going to bring this back in 50 years, what you're going to see is that 50, there we go, let's go 50 years. You're going to see that the average, not the average, but where it trades quite a bit, okay, is 85, 85 to 95 that's a normal deal. It's not the end of the world. So just because the dollar is going to hell in a handbag doesn't mean it's the end of the world. It's not. What you do have happening out here, my take is that we get inflation hitting fast, furious, all of the above. For many years, what you've had out here is that, okay, we see it in food, you see it in things that you need versus things that we just don't need. That is accelerating, folks, okay? The Fed is going to be coming out in September with the theses that they did, prior to COVID. And what this thesis is going to be about, this is the first time they did this in a long time, is, number one, why they're looking for 2%. They start dribbling this out yesterday. It looks to me like they're going to make a case that they actually want inflation to go over 2%, and fundamentally, to me, that actually makes sense. Why? Because our debt structure is through the roof. So the bottom line is that you get a debt structure that's through the roof. If you can keep interest rates at a very low level, that's what you're going to do. That's what's happening here. When you take a look at the world in general, the interest rate structure is low everywhere. No two ways about that. The NQs, we take a look at the NQs, the bottom line inside the NQs out here. You had a huge acceleration on the way up this morning. You were up there at the 11,382, and you can see as we're coming through the market, bottom line, they're selling this baby down. You can kind of tell just looking at Walmart. Walmart come out with some phenomenal numbers this morning, and what you had out here, bottom line, Walmart got up to 137.63. Couldn't hold price. The reason it couldn't hold price, folks, is that the market is saying, what have you done for me today? That being said, Walmart's in a larger ABC structure on the way up. You're going to have the volume, you have the price. It got over that level. It doesn't look to me like it's going to hold out here today, meaning hold price out here today. 877-927-6648. Some of the higher volume equities out here today. We have Macy's. Oh, is that down 60 cents? Yeah, Macy's down 60. Let's see, Macy's on its way out of business. This is sad. It's a great store. Well, that's not that bad. Okay, so Macy's, that just come out. Let me see if this just come out with numbers. All right, this is getting smacked with colds too. So Macy's right now is down 10%. No, they didn't get that. This has to do with Kohl's. What we have happening, folks, is inside the retail structure, only the strong will survive. And the bottom line is that you're talking about 3 or 4 very large retail companies. You're talking about Target. You're talking about Walmart. It's not the Burlingtons of the world. Let's see what Burlington. I think Burlington was coming out. B-R-U-L, I think. Burlington, I believe, was coming out with numbers today. And let's see what they did, because they... So Burlington is down 374, and they're not coming out to the 27th. But when you take a look at Burlington, when you take a look at Ross Stores, they say to me that they're going south, where you get Target, where you get Walmart. They want to go north. Dow Industrial's down 97, Nasdaq's up to 22, S&Ps are up off 4. We'll come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials right now down 87. You get the Nasdaq up 27. S&Ps are off 2.5. So we get a couple questions in here, and this is where when divergence comes in the marketplace, folks. There's we'll see how this shakes out, but there always are big divergences, particularly when you get larger changes of trend. One of the questions here is that the correlation between the dollar breaking down, a potential for the SPY and ES to give it up. So when I look at the market right now, the market has gone exponential. That market going exponential is also telling me that inflation's coming in. Because what happens is this. You can get a much larger number, but you can't buy as much with that number, if in fact we're in the middle of inflation right now. So that's why I think that the S&Ps has gone so dramatically higher in general, okay? That being said, now the question is, what Jimmy's addressing here is that, okay, if the dollar goes lower, can the market go lower? And that's a real toss-up, man. The reason I'm saying it's a real toss-up is that when you look at it on a fundamental basis, it would be like, no, the dollar could go lower and the market could go higher because you're buying less, okay? That being said, the largest moves I've seen down in the S&P 500 in the last 25 years has been either the note market exploding or currencies. Right? When there are very fast moves inside the currency market or the note market, that puts a disconnect into hundreds of thousands of trades. That's where it shakes out. So my answer would be that yes, if the dollar drives down to the 88 too fast, that yes, the S&P will go south with it very quickly because of the fact that you'll have changes inside of all the markets as to how folks are actually hedging themselves. That's how that kind of shakes out. What I do really dig, being a metals bull, is that I love it, actually, just like with they're selling gold off, but yet the dollar is still down. Well, guess what? That doesn't fly, folks, okay? That just doesn't fly. And it always corrects itself. And, you know, it corrects itself in the aspect of it goes back to how it normally should. We get another question about the, let's see, about Barrick Gold. So Barrick Gold yesterday, bottom line, had monster volume. Wasn't that up that high in price, really? You know, we were only up 10%, which, you know, when you take a look at this volume, you're going to see 53 million, right? Well, bottom line is that this is another ABC structure up, and it's a big one. Well, let's see. It's $30 is B. Yeah, it's $10. No, what is that? 22? Man, it'd be nice. Okay, 23. That's, yeah, it's $8. So Barrick is on its way to 33. Right now, you're at $30.32. I suspect Barrick's actually on the way to $50. What? Well, no, the next leg, yeah, next leg is 43. You know, but we've been talking about this for a while, meaning once you busted the consolidation on all these equities, in Barrick's case was $23, you're at 30. Your next step up there is up at 43. 43 to, yeah, 43, I don't think it's going to get any flack until 43. So it's a big number. We go take a look at Kenross Gold. Kenross out here is trading at $9.30. They're going to be, next time they come out with numbers is the 4th of September. Same setup. So Kenross is on its way up to the $11.19. When you're taking a look at all of these, folks, what you want to do is you just got to, the consolidation that was at the top of 2016, with your next swing point, that's what you're gunning for. The cool thing that has happened inside of the consolidation as it took it out is that we had come down so fast from 2011, when that thing just imploded on the way down, that once you actually take that area out, which we have in many of these equities, you can go up just as fast, because what ends up happening is that you don't have any resistance because that thing had come down so fast. That's just how it goes. So you're talking about big numbers out here. We go take a look at Walmart. You know, Walmart's the king out here, folks. The bottom line is that, yeah, it couldn't hold price out here today, but Walmart's another ABC structure on the way up. Right now, Walmart's down $1.30. You went to $137.63, couldn't hold price, which, by the way, makes sense, because this is an indication also that we're going to get a pullback, because the numbers are exponential inside of Walmart. And Walmart did, so check this out, Walmart did $137 billion in 90 days. Last year they did $130 billion. They brought $1.56 to the bottom line, and last year was $1.27. And now inside of that also, their margins went up. And if Walmart's margins can go up, folks, what that is saying is that they're not just selling food, they're selling stuff. And it looks to me that when you put the big retailers together, you got Walmart, you got Target, they're eating everyone else's lunches. I mean, in a monster way. So unfortunately, you're going to have that middle of the lower end of retailers already fell out. They're already BK. The middle is the next one that's going. And, you know, larger companies are only going to get larger. That's how this thing is shaking out, which is pretty intense. And they're going to be divvying up the amount of money that we spend, where prior to COVID, not just prior to COVID, when it ends up happening, because it's even before that. Retail's been going down for quite some time. But you get the gist of it. If we took $100, it was split up maybe between 6 companies before, with, you know, Walmart, Amazon, Target getting the top part of that, right? Now what you have, you get that $100, you know, maybe there's 1 or 2 left, maybe there's a Ross left, maybe there's a Burlington left. At the lower end of that, Kohl's out here today, the CEO is talking about the destruction inside of the business, and they're actually talking about the aspect that they think there's many deals out here. Let me show you this. This gets interesting. That's like, okay, they're going to try to get in the real estate business. I think this is a big mistake, but the bottom line is that that CEO is talking about the aspect of thousands of stores that have gone out of business. Here it is here. So Michelle Gass, who's the CEO, on grabbing cheap properties as retailers close. There are literally thousands of stores that unfortunately are facing dire consequences and facing closures. We will go after that market share. Well, guess what? The bottom line is that they are part of that market share, which is pretty wild. Not sure what they think they're going to do with all of those. If you can figure out right now what you can put into these retailers, meaning what types of stores you can put into it, yeah, you're going to do really well. Because whoever can figure that out first, there's going to be a lot of space that's totally negotiable in spades. Let's go over to the silver market. You can see that they're whacking gold, they're whacking silver. That is telling me, that's the indication that, guess what, the market itself is not going to hold. 877-927-6648. Stay right there, folks. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down 171, Nasdaq's down 23, S&Ps are off 13, gold's down 7. They're selling everything, folks. Let's go to Carl in Buffalo, New York. Hey, Carl, what's going on?
I'm doing well, Tom. Thanks for calling, or thanks for taking my call. I've been watching your show for a number of years now, and I've got a trade set up here on my own indicators here. I was hoping to see if you could take a look at the VIXI and tell me kind of what you're seeing on your end.
Absolutely. So let's take a look. So you got the VIXI, VIXY, folks. Okay, this is the ProShares Short-Term Futures ETF Exchange-Traded Fund that trades. Okay, so that's a 1-to-1. Cool. Okay, that's cool. So now you already own this?
A very small amount, like half a standard. What
okay,
I would normally
you can buy
trade
it right
for
now.
Something, just
I mean,
like,
the market's going south. This is going to go north. You know, I'd jump right now, man. You know, particularly because what happens with something like this, you have to be in the VIXI before the market falls apart. That's the bottom line.
Right.
You know, this is one of those deals, and you get it going with you out here today, because when they're selling everything, meaning that you can see it. Like when we opened up, they start selling gold right away. They sold silver right away. The dollar's still down. Bottom line is that you get, you know, they're throwing good babies out, bad babies out, all of the above out. So in this case here, what you could do is that if you just got more of it, you see where this shakes out at the end of the day. But I suspect even at the end of the day, you're going to be up at somewhere about 21, 26, the highs of yesterday. And if you're not, then you can, you know, basically take that half a position off again, you know. But I suspect what we have out here today is that tried to get the higher price, couldn't handle it, pulling down. And in a lot of this, I'm just off Walmart, because what has happened with the retailers, folks, the retailers went exponential yesterday before the fact. Today, you know, my take is Walmart still wants to go a lot higher, but guess what? They are selling it down. So that's a nice little setup when technically, you got an ABC structure on the way up. Fundamentally, they came in with the numbers, but guess what? It's time for, you know, basically the markets to sell off. So then when they sell everything off, that's when you get action inside the VIXI, man.
Yeah, I gotcha. I was looking at primarily investing in this as a way of hedging against the market. How would you... I'm still trying to figure out how necessarily to trade the top of the market with the bottom of what would be the VIXI. Do you have any thoughts on that?
This wouldn't be a good vehicle for that. This is really a short-term vehicle in a huge way. And what happens is that when you're in this, like you're already in a half position, it will move very fast on a downdraft, okay? And then it moves sideways to lower on a continual basis, though. Meaning, because the markets and numbers in general are always going to go up, because all you have to do is just compound 2% a year in inflation, and the bottom line, you're going to get a higher number. It doesn't mean that you're going to buy more. You see what I'm saying? So the VIXI, any hedge that is like that, meaning that the market has to move in order for that to move first, is a short-term deal, you know.
Right, yeah, it would be just a short-term hedge, so that if you take a kick in the bucket on your primary investment, that you've got something that's making a little bit of money on the side while you're in a dip, you know?
Exactly, right.
All right, thank you very much,
Okay,
Tom.
man, have a great one, have a safe one. Let's go to Bob in Carolina. Hey, Bob, what's going on, brother?
Oh, not much, Tom. How are you?
I'm doing great, man. Thanks for calling. Thanks for holding, man.
What's happening with platinum? I don't know. It's twice the price, half the price of gold, and it just doesn't seem to want to go anyway.
I know. I'd buy it, though. The bottom line is that if you take a look at platinum here, we'll pull it up, okay? You know, there's been a disconnect, and that disconnect has been a long period of time. But if you get the aspect of what platinum actually is, you know, my take is that that's going higher in the correlation. It's just a matter of, is it a year? Is it 2 years? Meaning that it can overtake gold again? We'll see. You know, what has happened in the gold market is that, you know, I've talked about this many times, is that what you used to have, folks, is that, so 10 tons of dirt, ore, okay, a good gold company, 10 tons of ore would get you basically in the beginning of the 2000s get you almost an ounce of gold, okay? That would be, so just pitch that. That's what's so bizarre. You get 10 tons, you only get an ounce out. They're saying now that the past few years, 10 tons of ore are getting you about a half ounce, okay? So platinum is even heavier because it's harder to get out of the rock. That's what happens to a platinum mine. Platinum is a different material. It's hard to basically get that out of the rock. So, you know, if you're going for this for a longer period of time, man, I'd just go for it, you know, because if you've had, you know, if you had them in your hand, if you know, fundamentally how they're set up, the bottom line is that the last 5 years, yeah, it's been lower than gold. The past, well, let's put it up. I think it's the past. I don't think this has ever happened before, actually. Let me just pull this up. I'll put the gold one up with the platinum. And we're going to compare PL1. Okay, so update this. I'm going to bring this back 50 years and see how far I can go.
That's a long time.
Well, that's what you want to look at, man. That's, I mean, because things, you know, it's just like wingtips. They always keep coming back, man. Where are you? Come on, baby. Select the... Why isn't this doing it for me? There we go. Okay, so I'm bringing this back 50 years just to show you the correlation of when this broke down. Okay, so I can bring this back to 1986, and you can see the yellow line is the platinum, the white line is gold. You know, it's always been higher. The correlation broke down actually 2014, so we've been on 6 years now. You know.
Yeah, but don't you think sometime in the future people are going to say, "Gee, what a bargain platinum is compared to gold"?
I think it is right now.
I know the uses are different and everything, but...
oh, yeah. No, listen, my take is that right now, I own both of them. But the bottom line is that platinum, to me, is the deal. Yeah. Particularly, it's even more so now because the metals are moving. And if I'm right on the deal of the inflation, they're all going to move, man. You know, because, you know, the bottom line is that it's going to take more dollars to buy anything. So, yeah, I'd be all over the platinum market.
Yeah, but it's going to take more of platinum to catch up. I mean, it's going to have to be a monumental move for that.
Well, it just depends whether you know, when you say a monumental move, the platinum is at, you know, 890, right? I mean, gold's at what, 2,000?
Yeah.
Yeah, it doesn't have to, for you to make money, you know, it doesn't have to go to 2,000. Platinum go to 1,500 and you just made, you know, 50% of your money.
Yeah. All right. Thanks a lot, Tom.
Okay, man. Have a great one. Have a safe one. Stay right there, folks. We'll come right back. Our phone number is 877-927-6648. We get the Dow down 125. Nasdaq's up 2. S&Ps are up 7.5. We'll come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's down 125, Nasdaq's up 1, S&Ps are off 8. Let's go to our man John in Philly. What's going on, brother?
Big Tom, good to hear your voice, sir.
Good to hear yours too, man. How you been?
Say, I've been very good.
Good.
I was dreaming about you while you were doing your sailing down there in the Gulf.
That's a beautiful thing. Thanks, man.
Listen, Tom, I wanted to ask for your help, please, on McEwen Mining MUX. By way of background, back on July 28th, I booked gains at the instant that you were speaking with a caller that very day on your show about that stock, and had a big rally. So, and I've been along for months, booked a gain there. It's now pulled back, and Robbie McEwen just raised some financing to evidently do some exploration work up in Ontario, in an area that he's intimately familiar with. So now that the stock is pulled back from $1.50 to $1.35, it's just 10% down. Is the stock a rebuy right here?
No, I wouldn't buy it until you get into the 120, John. They're at 132. Now, what you have here, folks, is this. I haven't found this yet. I've done a couple deals with Rob in the past, okay? I didn't do this deal right now. So what you had is this, okay? You had a flow-through financing deal that was done. And now what happens, folks, is that you can still do this deal if you're in the U.S., but the bottom line is that it's a Canadian deal. And it's a flow-through financing deal. And when you read the top of it, it looks that you're trading at 132, okay? This deal was done at 165. But what happens, which I haven't found yet, John, is that most times when this happens, you actually get shares. So if you just read this, folks, it looks like, and in fact, Bloomberg is saying it's 21% over the price. Well, I can almost guarantee you that that's not the way it is, because when you do a flow-through deal, which I've done 2 of them with him in the past, okay, is that what ends up happening is that you get shares, and then you get options inside of that. Now, right here, it looks like they're saying it's only shares, but that is normally not how it goes. What ends up happening is that you can get a share, then you normally get an option with that for like a half a share going forward. So what I would try to do first, John, is to find out, okay, what is the real deal here? And I don't quite understand why I've pulled up 3 different things and haven't seen that the full disclosure yet, because it doesn't make any sense that people would come in with $9 million over the price. You know what I mean? When you do these deals, most times what happens is that you're actually almost in a profit as soon as you do them because you're actually financing the deal. Do you know what I'm saying?
Yes, yes.
So I suspect, the buy is where the breakout area is here. And the way that they're basically, pushing the gold market right now, I suspect we'll probably get it, the divergence is out here. Gold was up $25 earlier. Silver was up $1.20, and right now you're down 22 cents. And the dollar's still down, So I think we're going to be able to get some really nice buys here, man. That's the bottom line.
One thing just about McEwen, two things that interested me here. One, the pullback in price, and two, this deal. And he's going to deploy that money up in Ontario in that Timmins district.
Timmins, yeah, right.
Which has been well explored and well produced, and he knows that area. And I'm just my antenna went up because he's obviously pulling in some more money to do something there. And he is always looking. He's very plugged in, and he had bought into the Vancouver exchange-based Great Bear Resources (GBR). Very low. That those players, that person that he helped finance, found another deposit up in that Red Lake region. So anytime he's doing something up in Canada, I'm always intrigued if I can get it at a pullback price.
Oh, yeah. He knows this business upside down. There's no doubt, man. And what does happen, which is always cool, folks, is that he puts a huge amount of his own money in it. So, yeah, it's always nice when you're investing with someone that has a huge amount of money inside the equity. There's no doubt, John, so.
Thanks so much, Tom. I appreciate it.
Okay, man. Have a great one. Have a safe one. 877-927-6648. Let's go take a look inside the Dow, see what's putting the weakness inside the Dow out here today. Chevron, interesting. Chevron's down 2.7%. You get JP Morgan off 1.2. Home Depot's down 1. And point-wise here, let's see what we got. Point-wise, it's going to be, look at this, man. So this is really intriguing. Hold on, this can't be right. Hold on, I did this. 1 second. I just brought this up. Oh, let's do it. Okay, so, yeah, there we go. That makes more sense. So Home Depot is putting 22 negative points in. Chevron, 17. Visa, 14. Nothing really big out here. These are all small numbers. Procter & Gamble is the winner out here today. That's putting 10 positive points inside of the Dow Industrials. Apple's putting 3. We go into the NDX 100. We take a look at the NDX 100, the strength versus the weakness out here this morning. You got JD.com is up 4.6%. Microchip Technologies up 4. Tesla's up 4. Look at Tesla, man. We'll go back to Tesla in a second. Pretty amazing. Moderna is down 3.9. You got Ross Stores up 3.5. Ultra Salon is down 3. And you got Dollar Tree down 2%. Tesla, we go over and take a look at Tesla. Tesla had that high volume high, folks. Bottom line, it went for it. Blew it away, the high volume high that's laying out there. And if you just want to understand how high volume highs, high volume lows love to get tested, Tesla is a good equity to look at because this thing was sticking out like a sore thumb. The bottom line is that you had Tesla hit 1794. That was on the 13th of July. Pulls back into 1365, pulled back with tremendously lighter volume. So watch this. You came back with 2.1 million shares, which was the breakout area of 5.9. So no sellers, right? Bottom line, you expand up again, and the bottom line, you're over that level right now. Now, there's no doubt, as one of our tigers are saying, you took it out with 50% lighter volume. You did, but what you need, when you have a failure, folks, you need to take an equity. Let's say we'll do the top and the bottom. If you have a failure at the top, what happens is that you go over the top, you close under the top, and you have lighter volume. Now, in that case, that would have been a big one because it's 50%. If it's in the lows and it wants to reject lower price, you go to a lower low. You have a contraction of volume, big time. You reject lower price. That's a failure on price and volume. When you close over the level, the bottom line is that, number one, you can keep going, and number two, you will eventually get another test. And then what would end up happening is that once you get the test, then you get a failure because things can't go up forever or go down forever. So it always happens. then what would end up happening is you come back to the level where you had the volume. Now, in Tesla's case, that would be only saying that you come back to 1794. So Tesla is on a run. There's no doubt about it. Dow Industrials right now trading down 100. S&Ps are off 4.5. You get the Dow Nasdaq Composite up 29. Stay right there, folks. Come right back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab. Bam!
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Dow Industrials right now down 94. You get the Nasdaq up 34. S&Ps are off 3.5. Dollar, bottom line, folks, can't hold price. So this is going to be number one, a big move. Get you the number out here inside the dollar. The dollar hit a 92.127 today. Right now, you're at 92.352. The dollar would have to reject 546. That would be the number. If we got that bottom line, then that would say, hey, guess what? That dollar's going to bounce. Thus far, you don't have any evidence that that's going to happen. We take a look at the rest of these currencies. They've been in an uptrend for a long period of time. Euro right now is blowing away that top. And the euro, these are all large ABCs up as the dollar's large ABC down. So the B point inside the euro is out there at 119.200. Let's just call it 119. The A is 111. So you got 8 out here, and 8 gets you 124. We pull this back, take a look at it, and you're going to see it's pretty wild how these things shake out. The next swing point is 124. So you got an ABC structure up there. Now, what happened with the euro is that if it gets back into that anything over the 120 gets you back in the larger range, which does set up the 139 number. In fact, let me do this for a second. Let me see this. Close that one. I suspect that we've broken this downtrend with conviction. Where are you? Right there. Yeah, we have. The euro is going to 136. Right now, you're at 119. You're talking about big numbers. Stay right there, folks. We get Think or Swim coming up next. And I'm Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon to recap out here. We have the Dow down 97, Nasdaq's up 32, S&Ps are up 4. Have a great one, folks. Have a safe one. We'll talk to you in a bit.